Are you an investor in this market, or perhaps you're looking to buy a second home and you've been a little disconcerted with the rates you're finding out there? Let's talk a little bit about that. So sometimes you're finding these interest rates that are a point and a half higher than traditional conforming rates, even 2 points higher sometimes, charging you 1 or 2 points to get there. So let's talk a little bit about why that is and how we can solve that. So one thing that Fannie and Freddie, the regulators behind mortgage-backed securities and loan products have done is what they've done is they've added what they call LLPAs, or loan level price adjustments, to both second homes and investment properties. So they're no longer subsidizing either of those properties, or either of those loan types in order to push more money and take LLPAs out of first-time buyers. So that means, your traditional second home used to be an eighth or a quarter worse at most compared to a traditional conforming loan with 10% down. Now you've got to get to 20% down and you're still a point and a half, 2% higher. So what they've done is they've tried to make it better for first-time buyers. Now the cool thing is, here at UMortgage, and I wanted to bring this video out today, is we now have some private label security money. So some of our investors have what they call private label securities or investment products for second home and investment products. Now, a couple caveats: 680 minimum credit score, 45% max DTI on the back end, and you need 20% down. Of course, the more down you put, the better the pricing gets. But now we are seeing rates that are in the sevens at par, whereas a lot of lenders out there are in the sevens to eights, charging a point or point and a half in discount to get there. Now, that might be some gray area you don't understand, but when I talk about discount, I'm talking about points, okay? So right now, a lot of investment properties, you're 8, 9, 10%, depending on the loan type, whether it be traditional conforming or if it's DSCR. Well, this product for investors will save you a bunch of money, obviously. Without charging any points, we can get you in the sevens. So one thing to look at is if you're looking at these homes, obviously, especially a second home, it makes a lot of sense. Investment-wise, you want to make sure that the rent roll matches what you're trying to do, that you can still cash flow. Sometimes it's not easy at rates like that, right? But now we have an option to at least give you the alternative to buy something that's not 8, 9, 10%. Not have to use a HELOC at 10% to pull money out of your other property to do it. Some people out there will tell you, oh, don't worry about it. Tell them it's a second home, or tell them it's a primary and you live there part of the time. Don't commit occupancy fraud. Don't listen to those guys. Do it correctly, buy it correctly, and when the rates drop, we'll do a refi, save you some money. So reach out to me. Let's talk about this. We're licensed in 40 plus states. We can help you in every one of those states do these loans. 20% down, 680 minimum credit score, 45% max DTI. Obviously, you can use the rents to help offset the cost of these properties, at least when it comes to an investment property. Second home is what it is. So don't hesitate to reach out. Let's talk about how we can make this more palatable without paying a bunch of points of fees. Now, if you still want to pay a point, which may make sense, then you get in the sixes. Let's talk about it. Look forward to talking with you.